Alrighty, we are recording now.
Okay.
Well, how are things going? How was the day at home?
The day at home was pretty good. It wasn't really at home, though. I took a contracts class today. Well, I took half of a contracts class today. We had a blizzard yesterday, and that was when the first half was scheduled. So today was the makeup of the first half of the contracts class. The state of Colorado has revamped their contract to buy and sell real estate. It used to be 16 pages, and now it's 20. Yay! So I learned a little bit about how to fill that out today.
Are there any more opportunities for newbies to make mistakes that I should be aware of?
There's 4 more pages of opportunities for newbies to make mistakes.
Oh, great.
Yay. They took some things out that were kind of superfluous. They put some more things in that will make you confused. Mm-hmm. It's, written by lawyers, so.
Makes sense.
There you go.
So what were we going to talk about today, by the way?
Today we're going to talk about crowdfunding for real estate investors.
Oh, that's right. Yes.
And you are going to be the expert, and I'm going to be the interviewer today.
Alrighty. Well, I'm definitely happy to do that. I know a little bit about crowdfunding, not everything. The reason I know that is because we're with BiggerPockets.com, and a lot of crowdfunding portals look to sponsor BiggerPockets.com. They want to get in front of our real estate investors, and they want to get investors of ours to do work with them. So I know about crowdfunding through my relationships with these portals, and I've seen the industry kind of develop over the last 2 years or so here. And it's been very interesting, so I'm excited to talk about it.
I have done some crowdfunding as a lender, and as a borrower, I guess, with Prosper and Lending Club. So not really real estate related, although Dawn Anastasi from, I believe it was podcast number 32. Let me look that up for a second. Dawn Anastasi, who invests in Milwaukee, was able to crowdfund several of her properties through Lending Club. I'm sorry, it was BiggerPockets podcast number 29. So that's biggerpockets.com/show29. I will put that link over here. Anyway, Dawn was able to purchase several of her properties using crowdfunding through either Lending Club or Prosper. I can't remember if she said which platform she used. They're basically the same thing, a little different. But let me put this link in here. BiggerPockets.com/show29.
Nice. And how would you say your experience with those crowdfunding investments went?
It was really great. I had at one point, I think I was making 12 or 13%, back when savings accounts were paying 0%. So, it was better than just sitting in the coffee can, better than being in the bank. And I had, I started off, I didn't want any risk. I started off with A rating loans. They both have their own rating system, but the A loans were the people with the 700 credit scores and the 800 credit scores, and they just, for whatever reason, didn't want to go and get a different kind of loan. These are uncollateralized loans, and through Prosper and Lending Club, I don't believe that some of these other portals are uncollateralized.
Yep.
But perhaps you could tell us about that a little bit later. Yeah, they were uncollateralized loans, and they were at a fairly decent interest rate, I believe 6-7%. The largest default I ever had was from a AA loan. The guy had stellar credit and took out an $18,000 loan and didn't even make one payment, probably defaulted as soon as he got his money. So that was awesome. But for the most part, I think I had 2 or 3 defaults, and everything else was they made their payments, I made my money, and everybody was happy.
Nice. Well, I thought we could start off with kind of just defining what crowdfunding really is. So what's your kind of definition of crowdfunding?
Well, crowdfunding is also called peer-to-peer lending. For Lending Club and Prosper. I'm not sure. Do they call it peer-to-peer lending when it's related to real estate?
So as far as real estate crowdfunding, well, to kind of answer that question, we have to go back into kind of what crowdfunding is. And crowdfunding in general is just simply defined as pooling money from a large number of small contributors to raise a larger pot, right? Most lending is done from one bank to one borrower, right?
Right.
You're talking about with Prosper Lending Club, there's many contributors to that loan and one borrower. In other cases, there can be in what's considered peer-to-peer lending. That's where one person might loan to one other person, peer-to-peer, right? As opposed to a bank to a person or a crowdfund to a pool of people to another person, right? Sure. So crowdfunding is just simply defined as that aspect of pooling together lots of relatively small contributions from a large number of people and distributing that to one party, one company, or one person, right? So to kind of go back another step, Kickstarter is a great example. Have you heard of Kickstarter?
Yes.
So Kickstarter is really funny because they kind of just fund projects, is what they call them. They don't actually fund businesses. They fund projects. Like one guy did a project of he wanted to make potato salad, and he made raised $50,000 to make his potato salad. His goal was $5. So he made an enormous thing of potato salad and shared it with like the whole city, basically. So that's one type of crowdfunding. That's how it kind of got started. The other type of crowdfunding is what we're talking about today. It's called equity crowdfunding. So equity crowdfunding differs from the potato salad project in the sense that when I am investing via a crowdfunding investment, I am looking for a return, right? When you lend money on Lending Club, you're expecting to get that money back with interest, right?
Yes.
And the person that if I loan to the potato salad project, I'd at most expect to get a bite of potato salad, right? very, very different from very different expectations going in, right?
Correct.
So the next step for that is, okay, what if that's the difference? Who can do this, right? So in Kickstarter, anybody can go ahead and invest, right? Because it's not really an investment; it's a gift or a donation, basically, to a project they want to fund.
Yes.
They can sometimes be expected to get a reward back, but with equity crowdfunding, you're expecting to get all your money back and make a lot of money, right?
Correct.
So when that happens, the government gets involved. The government is very involved in any type of investment and regulates them very tightly because that's where people get scammed, right? You're not going to get scammed donating, again, to the potato salad project, but you might get scammed by a guy who promises to double your money, and you give him your money expecting to make, $5,000 in return. So that's the difference between the two types of investments.
Okay.
So since the SEC is involved in crowdfunding, equity crowdfunding, and in regulating investments, they have limited the number of people who can contribute to equity crowdfunding. For the most part, only accredited investors can invest via the crowd in an equity investment. Do you know what an accredited investor is?
Yes, an accredited investor is someone who has $1 million or more in net worth, not including their home, their primary residence.
Yep, and there's other ways to become accredited. One way you can become accredited is by making over $250,000 per year.
I didn't know that. Is that a single person or is that a married couple? Can they?
It varies between single and being a couple. I think that the limits are lower if you're single and higher if you're a couple.
Okay. So
you can become an accredited investor in many ways, but basically it means one of two things. You make a lot of money or you have a lot of money. So those are the only people who can really invest in real estate or any type of equity crowdfunding easily. Now, what does that entail, right? So what that says is, let's think about a crowdfunding investment here. A crowdfunding investment, right, raise money by pooling together contributions from a bunch of investors to invest in a new apartment building, right? We're talking about real estate crowdfunding. So it might be, we're going to build a new apartment building. We're going to finance it. We're going to borrow some money from the bank, and then we're going to raise the rest from investors via the crowd. Well, who's going to want to invest a small amount of money in a big project like that, right?
Somebody who doesn't have a whole lot of money.
Exactly, someone who doesn't have a lot of money, but only the accredited investors have been able to thus far. So what you see here is you see a really good opportunity for investors like us, like me at least, who are not accredited, but are, want to get involved in real estate investing and in some of these types of deals that maybe are a little out of their reach, right? I can't build an apartment building on my own, but I can certainly buy a house on my own and invest it. Anyways, I want to invest via the crowd to get a stake in one of these larger projects that are really cool, but I can't quite afford to do it on my own.
Do you have the 25 million?
Yes, I don't have 25 million to build that new place in downtown Denver. So the guy who, and let's think about this from the accredited investor standpoint, right? Crowdfunding usually raises money again in small chunks from a large number of individuals. The really wealthy guy with millions of dollars, that's not going to be meaningful. Investing $5,000 isn't going to make a difference in his portfolio, but it can make a huge difference in mine. So we're talking about all these limitations of crowdfunding, but it's a really good tool that I think is going to really pop in the next couple of years for certain classes of investors that want to access these types of deals that they can't really previously access as opportunities are brought to them via crowdfunding.
So how much money do you need to invest in the crowdfunding? You don't need to be an accredited investor in some of these new portals like, what are some of the new portals? What are some of the ways that you can invest in crowdfunding? Or you can invest in real estate crowdfunding. Let's see. What are some of the ways that you can invest in real estate through these crowdfunding portals? So
there's several different ways that this has evolved in a couple of different ways for these portals, right? So when the idea of crowdfunding became a reality and these first equity portals started coming up, everybody had the expectation that, hey, what's going to happen in equity crowdfunding is everyone's going to want to buy into that big apartment complex that I just talked about and the really cool new real estate project going in downtown in their city. What we found is that's just not happening. People aren't doing that. And the reason why they're not doing that is because real estate is such a long-term game in a lot of cases. That apartment building is going to get built this year, but it's not going to necessarily return a lot of money to investors in the next 10 years, even in the next 30 years. So I mean, it will probably be a good return over time, but the predictability of those returns is very difficult, especially when it comes to things like appreciation. What we found instead with a lot of these portals is that they're very effective at lending money, especially to flippers and rehabbers. And where this comes into play is, let's say I'm trying to flip a house, right? I need a loan for $300,000 or $400,000. I want it to be high interest, short term. I'm going to use it to flip my property, remodel it, and then resell it for a profit. Well, crowdfunding can be a really good source of investment for that person because you can pull together a lot of small dollar amounts from investors who want a well collateralized, fairly safe investment, not totally safe, but much safer than an equity stake in a big apartment building that's highly speculative, because the loan is going to be collateralized by the property that's being rehabbed, and it's going to, there's going to be some innate equity in that property, hopefully, or at least in the after repair value. And these portals can pull together investors who would like those kind of high interest loans that are well collateralized, and that flipper or that rehabber who needs the money on the other hand. So that's kind of where we're seeing the market going right now, as far as the real opportunities to invest in crowdfunding. But again, there are those other types of crowdfunding opportunities in those big platforms. You're just seeing that with a very small percentage of crowdfunding portals.
Okay. And so you're saying that these crowdfunding, I was looking up and I wasn't sure if these crowdfunding portals were actually giving out loans for these little tiny, smaller than $20 million apartment buildings. I wasn't sure that they were giving these out. So how do you get a loan? Let's say I'm a flipper and I want to get a loan. Well, how do you get a loan through a FundRise or RealtyShares or RealtyTrack? Is that what it's called? I've got RealtyShares up.
You're bringing up, I think maybe perhaps accidentally, a really good point though that needs to be addressed. When this crowdfunding space came in, what does it take to become a crowdfunder, right? They're called crowdfunding portals. They're online websites that basically connect investors with people who need money. As far as what we're talking about with real estate crowdfunding is concerned. So all they really are is a website with an SEC registration. There are hundreds of these sites. And they're really cheap to start, or relatively cheap to start. And everyone has huge expectations because they want to be part of this new, big new crowdfunding bubble, or wave is what they're calling it. I call it a bubble. And I don't think it's a bubble in the sense that crowdfunding is not going to be a viable alternative down the line. I think that the bubble you're seeing is you're seeing so many entrants into the crowdfunding portal space that not all of them are going to make it. And you as an investor who's looking to crowdfund need to be very, very careful about which portals you choose, because some of those portals are legitimate and have a very big staff in place, are well-funded or equity-backed. They're not going out of business anytime soon. They're going to manage your investment very well over the long term. Other portals are just getting started, and they do not have that track record. Nobody has a really great track record because the industry has only been around for a few years. But there are some that are probably better bets than others. I can't recommend them personally because I've never used them, but I know that, for example, FundRise is a very large and well-funded crowdfunding portal that has gotten a lot of press and is something that people are talking about, right? I know I also work with a company called RealtyShares and a company called PatchOfLand that do kind of those smaller loans for rehab properties. And I know they've done a good number of deals. Not to say that any of these investments are going to pan out, but you want to be careful about which portals you choose and just make sure that they've been around, they've got some money, they have some deal flow, and they have a reasonable vetting process for the investments that you're going to be investing in. So that goes to your point of just mentioning all these different portals. What was your original question again?
Yeah, I don't remember. My original question was something about, anybody remember? Something about the different ways to invest. And I was actually looking to phrase that slightly differently. Like, how can I invest? Let's say I have $10,000 to invest in this, in crowdfunding, mm-hmm. and I want to do it in real estate. Is it just I choose a certain project to put my money into? Do they have a like a REIT or something like that? Do they have like a mutual fund of projects that I can just give them? Here's $10,000 and I want to have, type B risk, or I want to have type C risk, or however they do this. I have not actually crowdfunded anything through FundRise. I have done with Prosper and Lending Club. And that was, they had an auto fund where you just put in your money and you fund it that way, or they'll fund it for you, or you can pick and choose. And I always wanted to pick and choose because I'm kind of a control freak. Well,
going back to another point that you just made, you talk about REITs, right?
Yes.
And so so when it comes to crowdfunding and investing in general, there's so many different ways that you can invest in different assets and take on different amounts of risk, or well collateralize your asset and your investment and potentially lower that risk. One of the important things to remember is crowdfunding applies, as far as we're talking about, to investments that are not regulated by the SEC, like a publicly traded REIT, right? A publicly traded REIT is regulated by the SEC. They have to produce audited financial statements and all this other stuff to protect the public from being scammed, right? That's very important because that's very different from a crowdfunding investment, right? There are stipulations and things that you have to do before you can really market investments, even to accredited investors, usually with these portals. The portals will have criteria. They'll want to get financials. They'll want to get details about management and all that kind of stuff, but it's not going to be to the level of detail necessarily that the SEC requires. So it's very different from investing in a REIT in terms of the oversight of the investment by the government.
Okay.
Now, as far as how you can choose different projects within the crowdfunding space vary just like any other real estate project, right? There's going to be some speculative plays. There's going to be, collateralized loans that you're going to get on properties where you might have a preferred or more senior position. And there's going to be equity stakes that are kind of the last tier to get paid out, but take on have the highest potential for gain down the line. So it's up to you to understand, hey, am I investing in an equity stake via the crowd here? Or am I getting a loan? Am I giving a loan? Am I collateralized? Is my investment collateralized? what position is that note going to be in terms of the financing? Because a lot of these crowdfunding deals, they're going to borrow some money from the bank, some money via the crowd. They're going to have some equity. They're going to have a lot of different layers to these financing deals. Does that make sense?
Yes, that does make sense. So now you said that sometimes they'll be borrowing money from a bank and also borrowing from crowdfunding. So the bank is not really all that anxious to be in a second lien position.
Mm-hmm.
So
that's going to be more with kind of these bigger deals, right? When you're crowdfunding a flip, right, and they're basically acting as like a hard money lender with short-term financing that's going to be high interest. That type of investment is going to be pretty much just crowdfunding, right? They're just going to get a loan from one guy, flip the property, pay off the loan plus the points, and move on and do it again, right? One of these deals that, a big apartment going up in downtown Denver, right? That's going to need to get financed a little bit differently. There's going to be several layers of loans, likely. There's going to be 2 or 3 banks might come together to loan on the property, and they might raise some money from some wealthy investors. They might have the owners contribute a few $1 million, and they might raise the remaining amount via the crowd.
Okay.
So you have to be aware of what your position is. And that crowd position, that might be a loan, usually probably after one of these big banks. The big banks, you're right, are probably going to give them the lowest interest rates, but also want the most protection.
Right.
You might be a secondary lien on the property after that big bank, but before the investors that have equity positions.
Okay. Boy, that's interesting. So do crowdfunding sites offer 100% funding for these places for a flip, or are they expecting you to have your own skin in the game? I've heard a lot about hard money lenders, and they don't typically lend 100% of the funding until you at least have a track record, a significant track record. Some don't ever lend 100% of the loan. I guess it all depends on your, Jay Scott probably has no problem getting 100% funding because he's written the book.
Well, there you go. That's part of your answer right there. Is a crowdfunding portal. Their objective with a flipper is they want to find a flipper who has a great reputation and has done this before. They don't. The big worry is the last couple of years in the real estate market, things have been fine and dandy and things have been going great and everything's going up and everyone's making money. But sooner or later, crowdfunding investments, just like every other investment, are going to go belly up in certain cases for certain investors. When that happens, how can you protect yourself from being the scapegoat as the portal, right? So as a crowdfunding portal, what they're doing is they're trying to find these established flippers, these excellent businessmen who run professional operations, and they're trying to pool investors' money to fund those projects, right? I've never done a flip. They don't want to lend any money to Scott Trench because Scott Trench is a good guy to raise $500,000 from a pool of random investors from across the country and then go and try to do his first flip with that money, right? That's a bad call. What they're doing instead is they're giving money to people who are a little bit more established, and they're probably not going to give you the most favorable terms. So why would you, as a flipper, want to go to a crowdfunding portal when you could go to a hard money lender, right? I guess that's a real next question. Well, the answer is scalability, right? So if I'm the guy trying to raise money for my projects, the crowd is perpetually an unlimited source of money. Hard money lenders, on the other hand, they might lend out a few hundred grand, have it flip a project, get that money back plus, 10, 20 more in profit, and then lend it out again. That's not necessarily scalable if you want to take on 3 or 4 projects at once and kind of really grow your business. You're going to have to go elsewhere for that kind of funding, and you're probably going to have to give up some terms if you want to operate at more scale.
Is there a limit to how much you can borrow with the crowdfunding portal?
The limit to borrowing is the amount that they are willing to raise and the amount that they're willing to lend to you based on the criteria of your property. Right. So just like any lender, just like any investment, each crowdfunding portal is going to be slightly different, and they're going to have slightly different criteria for loans and for the investors that they choose to work with.
So I've got $10,000. I want to invest in real estate. I want to just crowdfund it. why wouldn't I just go buy my own property?
A number of reasons.
Go and get a loan. I could go, I want to flip a house. I want to have, and is this just for flippers or is it for landlords too? Can I use a crowdfunding platform to fund the purchase of a rental property? Is it a short-term loan? Can I get a loan term like a regular mortgage, a 15-year, a 30-year?
Well, so far the lending institutions have a big advantage when it comes to that type of financing, I think. And I have yet to see that type of lending occur from a crowdfunding portal at scale. That's not to say it won't happen, but it hasn't happened yet. And I think the reason for that is that the investors that are investing via the crowd want better than a 3-4% interest rate that these long-term mortgages are really going to get, and they want to get paid before that, right? Big banks have an advantage because they can go ahead and sell that mortgage to a secondary market and move on from there. So I don't think you're going to see that type of financing available via the crowd before you see more growth in the other areas we talked about, like that short-term side and the equity parts of real estate investing in large commercial buildings.
When you say short-term, what sort of term are you talking about?
The length of time that you'd expect a flip to take place in. So 6 months to a year, maybe a development project. If it's a little bit longer of a development project, maybe 2 years. You're basically funding a project that, people aren't really investing in the crowd and expecting to park that money there for 30 years. It's just not what you're seeing right now. Instead, you're seeing people that are wanting to get their invest, test the waters, and get the money back out. And there's only a few types of real estate funding that really does that well. And that's going to be you're constructing a new project and you're going to sell off the project when you're done, or you've got a short-term loan that's going to be paid off when the project's completed. And that's not a hard and fast rule. That just tends to be the case in what I've seen these portals doing in the past few years.
Is there an opportunity to refinance through the crowdfund? Let's say you've got a 6-month flip and then you decide that it's not taking you 6 months, you break your leg, you discover all sorts of issues, whatever, and it takes a year. Are you able to refinance or re-up your loan, extend it?
Well, I would consider that to be like a hard money loan, right? What would I do in the situation where I get in trouble and my investment goes south? Well, one, I expect to lose some money as the initial investor and the project manager. And two, I would expect to either have to pay off that loan by raising money from somebody else to pay off that loan, or you're going to default. And that's the risk of crowdfunding and for the investors on that side of it. So
what happens if I default? Let's talk about that for a little bit. Let's say I have gotten a loan for my flip and I am not able to finish it. The market goes south. I don't know what I'm doing, whatever. And I just stop making payments. What does the crowdfunding portal do? Do they come in and, especially if they're in a first position, they can come foreclose on my property.
Yeah, so the crowdfunding portal, their job is to manage the relationship between you, the investor, and person B, the borrower, right? The project manager. So let's say the project manager's project is going south and they're defaulting on payments. Well, what usually happens, this is not always the case, each crowdfunding portal is a little different, but often what the crowdfunding portal will do is they'll say, okay, these 40 investors who have crowdfunded this deal are going to be joint partners in this LLC. This LLC is lending to the investor managing the project, and that company is then, owed that money back. When the crowdfunding portal is managing the LLC that's giving the loan, right? When the project manager starts defaulting or the investment starting to go south, what's going to happen is that company in this particular scenario, managed by the portal, is going to take over the asset, in which case the construction of the project, and sell it off and give as much money as they possibly can back to the investors, right? And everyone's going to walk away at a loss. So that's kind of how that would work in a default scenario in that particular example.
So that's similar to a foreclosure. They would take it away from me.
Yes, they would probably foreclose on the property and sell it, or however they could try to minimize the loss to investors in that situation.
Okay. Christian has a question. What crowdfunding portal can one use?
So Christian, this is a good question. We touched on this a little bit earlier, but this is the problem with crowdfunding portals is that hundreds and hundreds of crowdfunding portals got started back when this was kind of a big fad, and everyone thought that crowdfunding real estate was going to be the next big thing. So there's some portals that have done a really good job, raised a lot of money, equity money to manage their business, the business of the crowdfunding portal. And there's other crowdfunding portals that have an SEC registration, but in reality are little more than just a website. They don't have anything, any deals funded. They've never returned $1 to investors. They've never even raised $1. And often those sites are really pretty, and there's a really good design in them, and they're going to fool you. So you want to look out for a number of things when you're selecting a crowdfunding portal as an investor. The first thing you want to look for is, do they have funding? Is this a real business? Is this a business that has maybe a couple $1 million in the bank and is not going to go bankrupt? Because what if you invest via that crowdfunding portal and the company goes bankrupt and there's no one left to manage your investment? You could lose everything. So you want to be very careful about that.
I think I've asked all the questions that I had. I wanted to get in there the comment that before, when you were an accredited investor, before these new rules came about, before these new changes came about, you had to be an accredited investor. You had to have a lot of money or make a lot of money, and now you don't. What is the minimum investment? Do I have to have $10,000? Do I have to have $1 million? How do I invest? What type of investing?
Well, first of all, the rules did change, and they changed on January 1st, and we can, that the whole discussion of the nuances of those rules is potentially a whole other topic for one of these talks. But I will say that as far as minimum investments go, it's still pretty difficult for non-accredited investors to invest in crowdfunding. I'm not necessarily seeing that option available at a lot of the portals that I work with yet. I know there's a lot of legal loopholes they still have to go through and a lot of different registrations they have to do. So I'm still not aware of any of these big portals that allow you to invest, at least in the majority of their investments, via the crowd. I'm sure that some of these portals can now advertise, hey, we do offer crowdfunding investments to everybody, including non-accredited investors, but I don't think that those options are available I don't think that the bulk of their investment opportunities are available to non-accredited investors. So that said, when it comes to minimums, usually the minimums are something in the ballpark that are significant enough so the portal doesn't have to deal with a lot of transactions, but not so big that it's going to break your bank. So usually what I'm seeing is in the ballpark of $5,000. $2,000 to $5,000 is kind of the lowest you'll see at a lot of these crowdfunding portals. So that may go down as technology gets better, as the industry evolves, and as we bring on much more opportunities to non-accredited investors.
And how do you get paid? Is this a quarterly? Is this a weekly? Or not weekly, monthly, annual? Do you get a check in the mail? Do you just...
Well, if you get paid, that's going to be stated in the terms of the investment. So when you go onto the crowdfunding portal, they're going to provide you information that will talk about the investment, the guy who's going to manage the project, how the money will be distributed. And again, usually that's going to be all the crowdfunding investors are going to pool together into one company that's going to be set up and managed by the portal. And that company is going to lend the money or invest the money on behalf of the investors and then collect and distribute the money on behalf of the investors. So the terms of repayment are going to vary depending on the investment. Some of them might be when the project's completed, we will pay all the money back in the case of a hard money loan. And some of them are going to be, this is an investment in equity. We're going to complete the project hopefully in 16 months and the expected dates are here. But if we don't, we're going to keep the money, the returns to investors are going to be delayed significantly. So does that answer your question?
Yes, it does. I don't really have any other questions about crowdfunding right now, Scott.
Alrighty. Well, I think we covered a lot of information about it. So hopefully this is valuable. Does anybody in the audience have any questions about crowdfunding before we depart here?
Okay. I think that we have answered it all. Are you currently looking at getting into crowdfunding? Are you currently looking at investing in the crowdfunding arena? Or are you going to go through do your own real estate investing?
Well, like I mentioned earlier, I think that there's relatively few opportunities that are great for unaccredited investors right now. I think that as these rules evolve and as the portals kind of adapt to the new regulations that have been passed by the SEC, you're going to see more regular people that are able to invest via the crowd, and you're going to see some really, the same access that wealthy people and accredited investors have to real estate investments. You're going to see that open up to people like me that are, regular guys who are interested in investing but don't have millions of dollars and are accredited. So I'm not convinced that in the short term, crowdfunding is a great option for me. I think that where crowdfunding is a really good option is, let's say you have just over $1 million and you're barely accredited. Well, in that case, investing $20,000 in 5 or 6 different investments, that makes a lot of sense. And it's really hard to do that in real estate for anybody else. It's really hard to invest 20 grand at a time in kind of a passive investment that's on the commercial or residential side of real estate investing. So that's where I think the person who's going to have the real opportunity in crowdfunding right now, that's the type of person who's going to benefit from current state of affairs in crowdfunding.
I also think that some of these higher price point areas, like your San Francisco, LA, New York, Denver. If you don't live in Denver, this may seem kind of funny, but Denver is experiencing ridiculous growth. We're both in the Denver area, and Denver you can't even buy a property. Everything on the market is already under contract. As soon as it hits the market, it's under contract. But, San Francisco is a perfect example. You can't get a property for less than, $1 million? I saw a question on Quora the other day. Where can I rent a 2-bedroom apartment in the Bay Area for under $1,000? Nowhere.
You can share a 1-bedroom apartment with 3 other people.
Yeah, no, he wanted a 2-bedroom apartment all to himself for $1,000. Yep, so do I. But not in the Bay Area. It's actually kind of cold there. But, the property prices there are just going through the roof. You've got your Google and your Apple and Facebook and all the tech companies right there in this one tiny little space. Everybody wants to work and live in this tiny little space. So prices are going through the roof. I might have a lot of money because I work at Google, but I can't afford a property, or I can just barely afford my own property. I can't afford to buy another property and rent it out. So I can see this once they get through all the SEC regulations and everything shakes out and there's more opportunities for regular Joes. I can see people from those higher priced places coming in and helping with crowdfunding.
Yeah, I think that I think this industry is going to see a lot of growth, just not the explosive growth that everyone predicted when it first started. But I do think there's going to be lots of opportunities coming along, and it's going to make a lot of things accessible to people that they just couldn't do before.
So, well, here's hoping. I'd like to get into some crowdfunding, but I don't want to dump $1 million into a deal.
Yep. Well, awesome. Let's wrap this up, and I hope everyone learned something here. We hope it was valuable, and I think we'll be doing this pretty much weekly going forward. So,
fantastic, Scott. Let's pick a topic for next week. We'll come off the air and talk about that. But hey, let's talk about real estate.
Let's do it.
That sounds great. Okay, then I will talk to you later. Have a lovely day.
Sounds good.
And thank you all for watching.
Yep. Bye, everyone.
Bye.